One of the things you say in your testimony is empirical results suggest that each dollar of new member business lending by credit unions generated 81 cents of an entirely new credit source for small businesses. So lending to small business is higher when credit unions are making small business loans. In other words, you say most credit union member business lending is not simply taking the place of small business lending that banks would have done anyway. In other words, if that dynamic's going on, is that because many of these loans are smaller loans?
That's my belief, yes. That's my understanding.
That's what drives it. And then that, in turn, your argument is that this drives access to credit in a way that otherwise wouldn't occur.
That's correct.
Without, well, maybe explain for a little bit the problem that credit unions under the $45 million in assets have when making member business lending loans, given that such programs have a certain economy of scale, right?
Yes.
And so you're up against the 12.25% cap. Two-thirds of credit unions are under this $45 million in assets. For those above, they generally have the member business lending programs. But the cap then is a factor in them making the decision in terms of member business lending, right? Because of the economies of scale.
That's correct.
Well, let me ask you another question. As the regulator tasked with ensuring credit unions remain safe and sound, do you believe credit unions have the experience and expertise for this type of member business lending?
Definitely, yes. And I think that their track record indicates that their delinquencies are competitive, their charge-offs are not very high. Between 2009 and 2010, 55 credit unions failed, and only one of those failures was related to business lending. So I think they have a very good track record.
Let me ask you another question. Are you concerned that raising the cap would open the credit unions up to additional risk?
No, I'm not. I think that the tiered approach provides an excellent way for credit unions to increase their lending in a very safe and sound way. We would be supervising it very carefully, and they would have to meet some very significant thresholds in order to get beyond the 12.25%.
And the methodology here is also that this isn't a blanket increase for all credit unions. There's a series of criteria that would have to be met in order to qualify. They'd have to show they had this expertise. As I understand the way it would work, they would have to get the approval.
That's correct.
In order to move forward. Let me ask you another question. We've got alternative programs out there, but one of them was the $30 billion Small Business Lending Fund. Now, for those of us here, we know how that was supposed to work, but the Wall Street Journal just ran a piece last October 6th that says that more than half of the money that has gone out has come back to the Treasury so that those institutions can get out from under the TARP restrictions and higher rates. One of the participants even called this a shell game. The advantage with respect to the approach we're doing here is that we're not taking, we're not going out and borrowing additional federal funds to do it. We're trying to take a focused area of expertise that certain credit unions have on small business lending and expand that cap in a way that for the segment of the market where what, three-quarters, I'm going through the study by the Fed there, three-quarters of businesses, small businesses are saying they don't have access. They were turned down in terms of the credit that they were seeking in 2010, or they received only some of the financing that they requested. Will this help meet that demand?
Very much so. Our chief economist has estimated that the passage of the legislation that you have introduced would add $5 billion in new lending.
And that's a lot of jobs that would
That's
go
a
with
lot of
that $5
jobs.
billion.